Hey guys, Mike with Mortgage Nerds here in Appleton, and I am with
Brian Hofmann with Mortgage Nerds.
Yes,
as
you
well.
are. Yes, you are. Today we're going to be doing rapid fire questions, right?
Sure.
See what we know here. Just kind of enlighten you guys with a few topics. We have Bailey here to help us out. You can't see her, but you can say hi, Bailey.
Hi.
So without further ado, let's do this.
Rapid fire.
Rapid fire.
Do you love mortgages and why?
I do. Do you?
I love mortgages.
I do. Because they're the best tool you have, hands down, to build wealth. Period.
I agree 100%.
Yep. And on top of that, do you know a billionaire that doesn't have a ton of real estate or mortgages?
No, because they actually use all of their wealth in other ways.
Yep. They invest in real estate, big, long mortgage. That's a whole other topic. But yes, I do love mortgages.
How many no money down programs do we have?
Ooh.
Bar? Wait. VA? USDA? WIDA?
Mm-hmm. WIDA conventional, WIDA FHA, does that count?
Oh, yeah, there you go.
Yeah.
Well, there's technically another FHA one,
Right.
the Shinoa
Right.
program. So, 4.
Okay. What is the max DTI on a VA loan?
There isn't any, right?
There
so
isn't.
their VA loans, their guidelines are different. It's not debt to income ratio. It is based off residual income. So there's a whole different factor there. But
What was the highest one we had? Again, I have a
right around 75% was the highest debt to income ratio that approved VA, no money down.
right. So, yeah, long story, but like, if somebody is just saying you don't qualify based on debt to income ratio for VA, that's inaccurate information. It's 100% different calculation. Residual income based on your family size
Absolutely.
and other factors.
Family size debts, things like that. Would we ever put somebody into a 75% debt to income ratio loan? No, not without
Actually,
compensating factors.
I was gonna say yes, and again, the whole other video. Rapid fire here.
What is the average time to get a loan closed?
Ooh,
Actually, I know this one.
do you?
We do it all the data for the last 6 months.
What is it?
It's 17.6 days from submission to clear to close.
That's purchases, refinances, everything encompassing.
Everything. And so, and then we're 12 or 14 days ahead of closing date. So that's to clear to close. And then for closing date, we're averaging around 12 days-ish
That's great.
ahead of time.
Do you need 20% down to buy a home or get the best rate?
Absolutely not. You actually can get a worse rate.
What?
with-
My mom told me, my parents told me I need 20% down.
My grandma and grandpa did too. Yes, your rate will actually be slightly worse or possibly pay a little bit more in discount if there's 20% down versus 19% down. Reason being, there's private mortgage insurance.
Right.
And when you remove that, you actually take and put more risk onto the investor, so they charge you for it.
Yep.
So no.
So let's elaborate real quick on that, just make sure you understood. Your rate can actually be worse if you put 20% down than if you would put, let's say, 17% down, because PMI covers the risk and you get a little bit better. And it's not a lot, but it's a little.
Yeah.
Yeah.
Absolutely.
So, no, and you can put 0, 3, 5, 7, 10,
3.5.
anywhere.
Yep.
So if your bank or credit union is telling you need 20% down, which a lot of them do, it's not true here and other places.
How often do you get beat in rates or costs from competitors?
All the time, we suck. No.
I honestly don't know if I ever have.
Yeah, it's
Since we moved to the broker world,
yeah.
I do not think I've ever been beat rate and costs. Somebody can say they have a lower rate, and I'm like, you know what? I find that hard to believe.
Yeah.
And then all of a sudden they show me a loan estimate, and that rate of theirs cost them $5,000 to get it, and I'm going, yeah, I could do that rate actually lower if you want to spend $5,000.
Yeah. So the magic is the LE from another lender. Once we get that, we can always break it down, compare apples to apples. It's extremely rare that we would ever get beaten that.
And if we would, we'd tell you to use the other lender.
Yep, we're very forward with that.
What is the best type of mortgage a borrower can get?
VA loan.
Hands down. And if they're not a veteran, the loan program that best fits their current situation, because everybody's situation is different at a different time in their life.
Yep. I just think the VA home loan has the most flexibility for a veteran, has the most flexibility, has extremely low rates.
An underwriter's job on a VA loan is to qualify the veteran and get them into the home. they're supposed to look for every possible way to
Yep.
get the veteran approved.
Yep, absolutely.
Yeah.
So,
What is the highest loan size you can go to?
Right now, I think it's 1.5 million.
yeah, it's per lender. You can do definitely. We don't really have this challenge very
Right.
often.
Right.
So
I mean,
yeah.
I've done 850, 950 VA loans. I've done jumbo conventional up to, I think I've done a 1.1.
Yeah.
But
So-
1.5 is most investors. There might be some $2 million investors
Yeah,
out
and
there.
they get a little bit riskier
Yep.
when it comes to that. But
What credit score do you go down to?
what credit score can we go down to, or do we go down to?
We
Yeah.
go to a 580 right now
And then
with
that-
compensating factors and
Right.
how the file looks and things like that.
Yeah. So just because you have a 580 score doesn't mean that we'll approve you. We would look at the whole financial picture,
Right.
and make sure that
You can be approved.
yeah, that you can make payments and all that kind of stuff. But
How often do you get an appraisal waiver?
I know this one
Often
too.
you're going to know this data.
Yeah.
Quite often,
Yeah.
actually.
And recently it's been a huge uptick, which I'm not sure, but it's over 50%. So it's like 50 to 53%, depending on the month. But that's on purchase and refis, and even cash outs.
Yep,
Cash
I just
out
got
refis.
one on a purchase, 20% down, and there's a waiver.
Yep. So advantage of a waiver, real quick.
No appraisal needed. You can have one done if you want to. However, if you do and the value comes in lower, you're stuck using that appraisal. You can't do the waiver anymore.
Right.
But the advantage is quick closing if needed. The amount of data that's collected to give the waiver, I'm pretty sure you can trust it. You're getting a good deal on that home if you're getting a waiver with
Yeah.
it.
No appraisal. No appraisal fee.
Exactly. No
Yep.
fee. Quick closing.
Quick closing. Yep.
Is it better to get a 15-year or 30-year mortgage?
30, hands down.
Yeah. Almost always a 30.
Almost always.
Yeah, so in the rare instance that there's a borrower that has maxed out their 401k, has 6 months PITI in the bank account or in 12 months, that's investing and doing all that kind of stuff, possibly a 15-year,
But at the same time, I look and go, you know what? Instead of paying all that extra towards your mortgage, invest it. Historically shows market's going to give you a better return. And the only way you're ever going to realize the return on your home is one, cash it out, or two, sell it. Otherwise, you aren't seeing that
Right.
additional investment
100%.
part of it.
So limiting your risk there. So invest your money versus paying down your mortgage. Only thing I was going to add to that, and if they were on the old,
Retirement age.
yeah, nearing retirement age, then it might make sense to do that.
Right.
But
Well,
almost always 30-year.
So what I always tell it just real quick is if it's if you want a 15-year, right? So invest those funds like you're, as if you were paying a 15-year. In 15 years, you probably made as much money as you need to
Yeah.
pay off your house and have the money that you made off of it left. So
Yeah.
after 15 years, your mortgage is done.
Could be
You
12.
made money and you just did what's best for your financial future.
Yep, and limited risk. Yep. We're not against paying off your mortgage. We're just against paying off your mortgage, paying down your mortgage like that, paying down your mortgage monthly.
Right.
Last one.
Ooh.
Why are brokers better?
It's gonna be like an hour long. No. You want to start?
Brokers are better. We have the resources to shop the multiple investors to find the lowest possible rates, lowest possible fees, and provide the best experience. We're not stuck in one scenario, one loan program, one investor, one
Overlays.
underwriting guidelines, right?
Right.
And we can shop all over the place and we can approve more people with better rates, cheaper costs.
Better rates, cheaper costs, more flexibility.
Hands
Hands
down.
down. And there's not a lot of brokers in Wisconsin, but so banks, credit unions, and retail, there's nothing against them. Just that
They don't have the flexibility that a
Yep.
mortgage broker has.
Yep. And honestly, most of them would be upfront about that. Yep, a mortgage broker has more flexibility than we do.
Absolutely.
Yep.
Yeah.
Cool. All right, guys. Hopefully, you guys learned a little bit there. That's a lot of information. But if you have any questions about any of it, please reach out to Brian or myself. Be happy to answer any questions. Until then, or until next time, I should say, remember, mortgages are complex.
Let mortgage nerds give you the answers you need.